Good morning, traders and investors. It is Monday, August 4th. It is a holiday in Canada, a civic holiday. TSX is closed, but the U.S. market should keep on ticking. Anyways, hopefully everybody had a great weekend. Let's jump into the charts here. Take a look at the markets. We have pretty much all the indices are trading higher, up about the same from, about half to 0.7%. So it's pretty level field. It's not one group of stocks really leading the other at this point. So it kind of looks like a broad market move. We did have a big sell-off there on Friday, or more or less Thursday and Friday. We saw a good little bout of selling. The market pushed to a nominal new high. It ended up getting into some selling, which is what we talked about, I think, on Friday morning or Thursday morning. We talked about how we're looking for a bigger correction in this market. And really, we've saw that already. When we talked about this about a week and a half ago, 2 weeks ago, we said, okay, everything is pointing to the VIX and the put-call ratio and just our sentiment indicators showing that we should start to see the market roll over. This here is the broad market. This is the way I look at the broad market. This is the equal-weighted S&P 500, the Russell 2000, and the microcap stocks. So this is the majority of what people's portfolios generally look like, or the majority of stocks. This is the group of them. You can see they have been selling off for a week already since we talked about the overall market should start selling off. Now, the S&P 500 and NASDAQ kept pushing to new all-time highs, yet really the market behind the scenes, if you get rid of the big mega caps, we've already seen the market sell off and roll over quite a bit. It was down about 6%. Most portfolios probably felt this pain, even though the NASDAQ and S&P 500 were pushing to new all-time highs. Most portfolios were actually getting beat up pretty good. And so that's kind of where we're at. Now, if we go and look at the S&P 500, we are probably dipping into a little bit of an oversold territory. We have lime green saying the market dropped way too fast, too quickly in this uptrend. So we're probably going to see some type of bounce, which we're already starting to see that bounce today. And we could see this work itself out. Again, we are in a phase here based on the NASDAQ where we had our trend reversal. We hit our 3 targets. We've closed it out at 15%. Now this is where the market generally becomes more volatile, and we could go into a multi-week, multi-month pullback potentially. S&P 500, same thing. If we look at this chart, we hit a target, 2 targets. We got out some last week, and now we're getting into that volatility, and that's typically what happens when these indices reach these specific targets. If we look at the sentiment chart here over on the right, you can see this deep red. We definitely have some change going on behind the scenes. There's some big money flowing out of the market. People are blood in the streets is why I have them kind of red. Red is negative. It means people are fearful. They're dumping shares. This doesn't mean the trend has changed. This just means there is a ton of fear and a ton of dumping distribution going on. And that is definitely a red sign. It's definitely putting some problems into this uptrend, getting us closer to a trend exit signal. So instead of a potential, we are still long. We're mostly in cash, but we're still long the SPY with a very small position left, just letting it continue to run. We could have the trend change red this week and kick us out, or it might want to correct down a bit further and potentially trigger out our protective stop that we have moved up. So we'll just have to see how that goes. Either way, I'm ready for a market correction. We've made our money on the way up. Our accounts have pushed to new all-time highs again. And now we just want to reset and for a new trade opportunity, a fresh trade going forward. Let's take a look over at the rest of the markets here. So we had some people wanted to touch on, let's take a look over at Bitcoin. I didn't touch on that in our last video. Bitcoin definitely flushed down with the markets. That's typically what happens. Now, this is usually, I say flush down because a lot of times it can be a flush down, meaning you have one of these drops. The market has a somewhat controlled pullback, and then it has a big drop in fear. This was another flush down. A lot of times you get these flushes where people bail out and they freak out and they get out just before the market kind of turns and reverses. And this could be that similar. It was in this very tight pattern, very clear support levels through here were broken. That's what the market likes to do. If it sees a ton of people with stop orders and orders placed there, it's going to go down there and try and get you out. And then reverse and go the other direction. This happens all the time, both with bull flags and bear flags. And so we have seen on our sentiment chart with these red bars over here on the right, we have seen there is potentially a change taking place. But at this point, the overall market trend hasn't changed. And if the stock market trend changes and goes down, you definitely don't want to be holding Bitcoin. It pretty still much moves with the NASDAQ and with the market as a whole. So if the market's going down, you really don't want to hold Bitcoin. Ever since it became a future traded, stuck in the financial markets, now it is stuck with the money flows of the rising and falling tide of the stock market to some great extent. Let's take a look at a couple other metals. Some of you wanted to look at platinum and palladium, and we'll look at copper. More or less, we talked about how it had this running correction. We went through this in great detail in our mentoring session. I think I talked about it even in a morning video. More or less, it's running and having this volatile correction to the upside. Instead of running up and then flagging, building a bull flag before going higher, it's correcting and shaking the heck out of people on the way up, and it's correcting and cleansing it as it goes up. And it usually ends very abruptly. As I talked about, it is a coin toss. It can have an explosive move to the upside followed by a huge sell-off, or it will just break down and collapse. And in this case, it just broke down and collapsed. Again, I say don't get involved with something with this pattern unless you just want to throw money away and gamble and you don't really care about making money, because that's what these plays do. They are just dangerous. It's a coin toss. That's not why we're in the markets in general. We're here to make money, not flip a coin to try and hit a home run. That has a very low probability of working. If we look at palladium, very similar type of price action. It was really volatile, had some big reversal candles. We saw some big selling going on. And more or less, we've seen the market have this sharp pullback. It had a little bear flag and broke down, and this could very easily break down and continue to unwind. But this is big volatility. Let's just zoom back on the charts here. Again, we talked about how this has put in potentially a very nice basing formation through here. It has put in a multi-year base. It has broken these highs. It's broken even this high here. So the momentum has gone from down to sideways. So a stage 4, stage 1, and now I would say it's trying to form a stage 2. Now, this is going to correct. It could build a launch pad and a base through here. It could last a very long time still. But it is showing signs that it's gone from down sideways to now it is going to probably start to hold its ground and potentially have some higher pricing here going forward. But definitely, again, when we get into these highs where we break these previous highs and all of these other ones here in this resistance, that's usually a spot where sellers are going to come in and it's going to have a pullback and correction from that point.